Hello and welcome. This is NC Title Talk, a product of Investors Title Insurance Company and its sister companies. The idea behind NC Title Talk is to provide North Carolina real estate attorneys, realtors, lenders, and others with a brief information segment about a topic that seems to be of particular interest in the real estate community. In short, we want to make your life a little bit easier by summarizing a topic in 20 minutes or so, which topic is likely something that is coming up in your real estate practice or in your business. So jumping right in, this discussion is meant to provide information on the ALTA Homeowner's Policy of Title Insurance. And with me today is Kevin Joyce, my colleague at Investors Title Insurance Company, and Tiffany Weber of Thomas & Weber, based in Mooresville, but also with offices in Denver and Huntersville, correct?
That's right.
Great. And my name is Jeff Benson. I'm with Investors Title Insurance Company too. So, and maybe starting off, the ALTA Homeowner's Policy of Title Insurance is a little bit of a confusing name because when people hear homeowner's policy, they think like their property and casualty insurance. And so sometimes it's informally referred to as the enhanced policy. We'll hear it called the enhanced policy. I'll probably just call it the homeowner's policy just for simplicity today. But in large part, or at least I think in large part, because of the prevalence of fraud issues that are so important now, and the fraud protections offered in the homeowner's policy, there seems to have been a real material spike in the level of interest and conversation around the homeowner's policy. So am I right in thinking that, was this even on your radar 2 years ago, the homeowner's policy? Were you getting calls about it? Tiffany, were you thinking about it in your practice?
I was not, and I wish that I would have been, especially now knowing that in addition to the fraud coverage, all of the other things that the homeowner's policy will cover. But when I started practicing in real estate, my late law partner was like, no, they don't need that. That was really kind of the idea, is like, it's a nice to have, but like they're fine with the standard policy. And that was kind of the approach that we took for many, many years.
How about you, Kevin? Was your phone ringing off the hook 2 years ago about the homeowner's policy?
No, not in the least. As someone who's been in the industry a long time, both as a closing attorney and title, we made several attempts through the years to educate folks on this, and there was just no real interest among the bar. I think it first got adopted in North Carolina in 1998. Somewhere in the late 90s. I can remember going to a breakfast where it was talked about, and my partner at the time saying, it's just a money grab. They don't need it. And so we've made some attempts through the years, but there hasn't been any real interest until the last year, 6 months even.
So fraud is a very scary word and a very scary thing for real estate practitioners and title insurance companies both. But it's also a very broad term, right? There's all sorts of different bad guys doing all sorts of different things when it comes to real estate transactions. So maybe, Kevin, if you could start us, talk about the fraud protection that's offered in the homeowner's policy.
Sure. And this is, I'll say this, this won't prevent all fraud but it is a tool in your toolbox of the many kinds of fraud that are being perpetrated against the real estate practice at this time. And what the homeowner's policy, the coverage it gives, is post-policy forgery protection. And so your standard policy would cover forged deeds back in your chain of title, but title insurance is unique, the standard policy, in that all other policies in types of insurance, life insurance, auto, home, look at a point in time forward and estimate what the likelihood of something happening would be. And the standard title policy looks backward in time and ensures that none of these things had happened up to that point. The homeowner's policy introduces for the first time policy coverages that are post-policy, that things that arise after. And to your point about the fraud coverage, it covers for post-policy forgery, which would be if someone forged a deed to your property or forged a lien against your property, like a deed of trust or a mortgage that you didn't actually sign, there would be coverage to remediate that. You wouldn't be on your own to do the quiet title or the action to void the lien. Got it.
So it's not covering every kind of fraud. It's not covering wire intercepts and all those sorts of things. It's covering if some bad guy puts a mortgage on your property or puts a deed transferring the property to their buddy in the hinterlands. That's what it's protecting.
Right, okay. Which is happening. There's a prominent case out of Wake County that's happened recently that's been on the news where someone forged a deed to someone's home, and it was a prominent dentist, I believe.
It was.
And it made the news. So it does happen, but it is an important tool in the toolbox, but you still have to watch your wires and do your other fraud safety measures. But this is the first thing that actually gives some coverage post-policy for some of these things.
Great. And Tiffany, what's kind of, when you hear that, and I'm sure you wake up every day in a little bit of a cold sweat thinking about fraud and fraud prevention, how does that, to use Kevin's word, tool in the toolbox, how do you assess the value of that?
Well, one of the things that concerns me most about fraud is that once they leave me, once my clients have closed and now they're moved into their home, there's not a whole lot left that I can do. You know, I do during the closing process all of the measures to make sure that we don't have a fake seller. You know, we're sending out the letters to the mailing address, doing all of those extra things. But after closing, you're on your own, kid. So if someone forges your deed after you already own the property in the past, you know, if I have a client call me saying that, I'm like, well, let's hire some litigation attorneys. That's what you're doing, but it's at their own expense. And that is, I mean, you all know better than anyone, being title insurers, it's not cheap. And not only do you have issues with your title, but then you're having to pay by the hour to try to get all of that remedied. And you feel very lonely in that.
Exactly. That's super helpful. So you mentioned when we were talking a moment ago that you wish you had known about a couple of years ago, because there is more to it than the fraud. And maybe starting with you, Kevin, talk about for a few minutes or maybe more than a few minutes about some of the key other protections that are in the homeowner's policy that real estate attorneys in North Carolina may want to know about.
Sure. So the standard policy has, I think, 10 coverages, and the homeowner's policy has 23 additional, in addition to the standard 10. And I won't go through all of those or we'd be here all night. And as interesting as they are, people might lose interest in that. But they're what I kind of call the big three, and then I'll talk about some others. But the big one that's got it on everybody's radar is the fraud and post-policy forgery, which is huge. There's also an inflationary clause in it because, you know, everyone wants to believe their property is going to increase in value. And the standard policy, whatever your coverage amount is your coverage amount for as long as you own the property. The homeowner's policy has built into it a 10% increase a year for the first 5 years, and it caps at that.
I'm learning that for the first time.
Yes. So
I like this policy and didn't really.
for an example, if you were to buy a $100,000 property, which I'm assuming at this point is a lot with nothing on it, but after 5 years, your coverage amount would be $150,000, and so it's going to increase. The other big one is there's some survey coverage in it. And I know there's a lot of pushback on folks to get surveys now, and there's even trouble getting surveys when they want them because surveyors are behind. There's kind of a crisis in the surveyor industry that there are not new surveyors coming in, but there's some survey coverage in it. So if you were not able to get a survey and you get the homeowner's policy, if any of your structures encroach on a neighbor's property at the time of the policy, including boundary walls or fences, there's coverage for that. And the boundary walls and fences have a deductible and a cap, but regular structures do not. If any of your structures at the time of the policy encroach into an easement or a setback line, there's coverage for that. If any of your neighbor's structures that are built after, it's another post-policy coverage, that are built after the date of the policy, encroach on your land, excluding boundary walls and fences. So if your neighbor builds a garage or an outbuilding and it encroaches on your property, even years afterwards, there's coverage for that. And so that's a huge expansion of the typical survey coverage. So those are the big three. There are additional coverages that I think are very helpful for particular situations. The standard policy on access covers legal access, which means you abut a public road or an easement that you have the right to use. It doesn't ensure that you actually have a driveway or a curb cut. That's more in what we would consider an ALTA 17 series coverage, where we typically require surveys and different things. That's built in, that actual and vehicular pedestrian access is built into the homeowner's policy. There is forced removal coverage for violation of restrictions, for zoning violations, which, and again, in the standard policy, there's no zoning coverage whatsoever. You have to get into the 3 series of ALTA endorsements. And for those, we typically require zoning letters. There is forced removal coverage for unpermitted improvements that have been built. So if there was a deck or addition that was built on that wasn't permitted and they forced removal of that, there's coverage for that, which isn't in the standard policy. So those are just some of the additional coverage. Subdivision violations, there's forced removal coverage for that, among the others. But those are the big ones that we see those issues arise on a regular basis.
Yeah, I think there's probably a subset of attorneys that could make a living just being fence lawyers for all the calls that would get by.
Yeah, exactly. And we would never want to encourage anyone to not get a survey, but to your point, sometimes it's hard to find a surveyor who can close on the timeline of the deal, and having the survey coverage provided, I imagine, would be helpful, on occasion when that just has to happen, just the timing doesn't line up.
Yeah, and it helps us in talking to the clients when they're freaking out because they can't get the surveyor out in time. Then we can tell them about this option and that can ease their fears a little bit. They can still proceed with getting their survey, do that, but you don't have to necessarily miss your closing because of it.
Yeah. So Tiffany, as a practicing real estate attorney who's doing closings every day, how do you think about the pros and I guess if there's any cons of the homeowner's policy, both for your clients and their protection, but maybe also for your protection as an attorney?
Well, I've had the nightmare truly just a nightmare, thankfully not for life, of having a client call me, that the homeowner's policy could have helped them and I never told them about it, They just got the standard policy and they would have gladly paid for the extra coverage if only they knew. So that's kind of in the back of my mind of, I've got to change how I look at this. So that means we have to change how we operate a little bit. As long as I've been practicing real estate, our engagement letter talks about, we're going to procure for you a standard policy of title insurance, and you have to tell us if you don't want that. Well, okay, we're still going to have that, except it's going to be the homeowner's policy of title insurance, and you have to tell us that you don't want it. And if you don't want it, we're going to have that discussion of all of the things that you're giving up by not accepting that policy and moving forward with it, and including some language in there that this is not our advice to you, and you're fully and completely what you're giving up by choosing to move forward without the homeowner's policy. I mean, just like if they were to tell us they don't want title insurance at all, we're already having that conversation. So it's just one layer up.
Yeah. What would you add to that? Anything, Kevin?
No, I think she covered it very well. I think the standard of care is shifting at this moment, and where it is determined this is what it is, nobody knows. We just want to feel like we need to educate folks about it because you don't want to be on the wrong side of it when it's decided this is what it is. I think, you're exactly right. Just like refusing to get title insurance at all, refusing to get a survey, I would put this on the list of things having the disclosure signed for your protection if they refuse to do it.
Yeah. So maybe drilling into what you just said, Tiffany, a little bit deeper. So, if an attorney like yourself wants to make it the standard, I mean, how do you do that? Do you put that in the engagement letter? Do you talk with realtors about, let them know how you're doing if that's your referral source? Are those kind of the nuts and bolts mechanics of how you're affecting
it? It is, yes. So adjusting the engagement letter was the first thing, and it really is just adjusting the language because it was already part of our procedure for if someone wants to decline title insurance. But as far as education, that's the different thing of trying to help people understand, realtors at this point, they get why you need title insurance, but they maybe don't get why the enhanced or the homeowner's policy is beneficial. So I tell them, you ask me about this title lock thing at closing every week. Well, this is better than that by a long shot. So let's, if you're even remotely thinking about telling your clients to get title lock, then let's talk about this homeowner's policy of title insurance because it's like I said, way more and a lot more benefit to the client.
Well, you mentioned that service, and there are others like it, I think. Talk about what's out there. What are the kind of the alternatives that are like that? What are they doing? Is that a monitoring of the Register of Deeds, and then
which here you can get for free. Sign up for property check.
Yeah, most of the counties now offer that for free. So I always advise people when they ask about that, sign up for the free service and get the homeowner's policy because those monitoring services let you know something's been recorded or something's happened with your property, you're still on your own to resolve it most of the time. And so if you couple a homeowner's policy with the free property check that most registries offer that you can sign up for online, there's no way to stop someone from walking down and recording a deed they signed in your name. They're just, bad actors are going to be bad actors. But if you find out about it immediately and you make a claim under this type of policy, then you're not going to be on the hook for having to void it and do the quiet title.
Got it. That makes total sense. Tiffany, you mentioned realtors a second ago. What's your sense of how familiar realtors are with kind of the changing landscape? I know fraud is something that they think about often as well, maybe not quite as often as we'd like in a perfect world, but they think about it a lot. Do we still have some catching up to do to educate them about the tools here? I mean, what's your thought in terms of how familiar they are with the fraud protections offered here?
In our market, not very familiar. We're just north of Charlotte. We cover a lot of Mecklenburg County as well. So I thought, oh, maybe Mecklenburg will be ahead of us a little bit, but it doesn't seem that way. So we're having a lot more conversations at the closing table and before about what this really means for the client, and also trying to help the agents be able to convey it clearly to their client up front so that when they're looking at their loan estimate or whatever it may be, then they can talk about what this charge means and why it's worth it to pay for this, so that it's not only a closing table discussion. It's, let's talk about that before you go under contract or when you get under contract, and not necessarily when you're signing the CD at my conference table.
Perfect. Kevin, what is the additional cost associated with the homeowner's policy?
It's 20% of the above the standard rate. So it's an additional, you look at what the standard rate would be before you apply the reissue credit for a policy, add 20% to that, and then apply the reissue credit.
Got it.
Which, if you consider the additional coverages, the survey coverage, the fraud coverage, it's really a bargain.
Yeah, I agree. So, and maybe to be eligible for the homeowner's policy, there's certain type of property that it's eligible for, and certain that it's not, and maybe same with the title holder as well. Could you explain a little bit about that?
Sure. So to be eligible for a homeowner's policy, it has to be a residential property. So there's no commercial, no vacant land. It's got to be a residential property with a structure on it. So no construction loans. So we're looking at a completed residential lot in a subdivision, a completed condominium residential, or a completed residential structure on the meets and bounds of less than 25 acres. All of those would qualify. The owner has to be a natural person or an estate planning entity. So like your trust that you create to keep assets out of probate. So no LLCs or corporations or partnerships, that kind of thing. It's designed to be, for home ownership. Now, we do not have a primary residence requirement. I know some states require that with the policy. We don't read it that way. So it's available for all residential property as long as it's owned by an individual.
So your beach house?
Your beach house, yes, unless you put it in some other kind of entity for tax purposes. But if you own it in your own name, your beach house would qualify, yes.
Can I ask a question about the estate planning entity? Did I see on the list that the homeowner's policy covers the beneficiaries of the trust as well? Because I don't believe the standard policy does. It's the trustees and the entity, but I could have sworn I saw on the list that maybe the beneficiaries would be covered.
Generally, I'd have to look into that, but generally the title policy will extend to folks who inherit or take property, under a will or through some kind of operation of law. So, most likely it would, yes.
Yeah, great. That's good news for me.
Well, thank you. This has been very helpful. I really appreciate your time, and hopefully this was helpful for our folks listening in.